You gave us a list of stocks that you're pretty bullish on. One of them's NVIDIA. You kind of rephrased don't fight the Fed to don't fight NVIDIA. We're going to show a chart of NVIDIA from last week when they announced that deal with OpenAI and also the Mag 7. NVIDIA's higher, Mag 7's lower. What does that in your mind say about the AI trade and investor confidence?
I think looking forward to NVIDIA, there's another sector or leg up of growth potentially, and that's quantum computing moving forward. The market's also looking at the robotics trade and what they can contribute to that, and industrial automation. So there is beyond just the GPUs and the data centers and all of the excess growth that we've seen. I think you don't want to bet against NVIDIA moving forward because there's another chapter that needs to be played out.
So, Robert, in all fairness, you use this word, excess growth that we've seen. We've seen a lot of growth in a very short period of time. You mentioned quantum computing, which I still think is seen as somewhat speculative. Isn't that a little bit nerve-wracking, maybe creating some nerves in your mind, the fact that we've seen such rampant growth and also investors are looking for other areas to play the AI trade outside of equities and maybe even outside of private markets?
Yeah, we're still in the first early innings of the AI trade. And really what it's going to come down to, that what's going to stop this on the semis is really the corporate spending of basically this war game of trying to grab as many chips as they can to compete for the future. Obviously, we've seen the Mag 7s participate greatly with all their capital spend. And so we're going to continue to look forward and be bullish on NVIDIA until we see that tune change. But right now, I think we're in the early stages.
Well, look, I think there is froth because everyone wants to cash in. But I do believe that Jensen Huang, if he were sitting here, would say, look, the only gating factor is power.
You don't think it's the money?
No, I think it's power.
Because we keep coming back to that Semblus note about OpenAI and Oracle. An amount of money OpenAI doesn't earn yet to provide cloud facilities that Oracle hasn't built yet.
Well, look, Semblus had the irony captured, but I do think that those who have the power will win. I think the power is, look, it's a couple companies that make these power plants.
Yep.
GE Vernova has not committed to doing more. They don't want to wreck their gross margins.
Right.
I think it's time for everybody to step up, but every time they've ever stepped up, it's been colossally bad. It's been like what you said, which is that we built too much. Now we don't need it all. Or it's like when we had so much fiber, we didn't need to light it.
Or the flip is that the next generation of chips, we brought this up yesterday, might be much more advanced that the current ones don't have a chance to earn any profits.
Well, that's the big negative, and I think that we can listen to Michael Entrader on that, and he'll tell you about how year 6, year 7, they're still worth something. I think the biggest threat is quantum, because quantum just does not require a lot of power.
Conceivably, or advances in chips that are run at far lower energy needs.
Okay, so.
Which would also, but by the way, conceivably it'd be a good thing in many ways, given the strain we're going to be putting on the grid.
Right, but
otherwise.
The energy is also, let's not forget, it's cooling, but it's copper. And when they go to glass, as Wendell Weeks said from Corning, look out.
Yeah.
It'll dramatically lower. Glass inside, remember there's glass outside. If they put glass inside, I think that solves a lot of the problems.
Guys, just to come back to CoreWeave just for a minute, I do want to, it is an 8K that has now been made public that details.
So maybe you believe me a little more on CoreWeave after?
No, I mean, they keep signing them up. There's no doubt about it. $14.2 billion through December 14th, 2031. That is Meta as their customer. An option to materially expand that commitment through 2032 for additional cloud computing capacity under the order form. Just gives you a sense as to what we're talking about here. That is thinking 6 years out and then even beyond that, potentially more.
Okay, so this is Zuckerberg. And I think that those who think that there's a bubble have to say that perhaps he doesn't know what he's doing. I'm not willing to do that. I think that Deutsche Bank's piece today, dated September 30, really great piece, says, one AI bubble has already burst. The bubble in saying there's a bubble.
Well, what did Zuck say the other day? If we end up misspending a couple $100 billion, that's unfortunate.
Jeez,
that's a great
But the risk is higher on the other side.
Even Trump has not said that.
Yeah.
President Trump.
A couple $100 billion.
Our top story, though, NVIDIA becoming the first ever company to hit $4.5 trillion in market cap. Maybe it seemed like a formality to many, but it is really representative of where we are in this AI story, Josh. Is it not? The stock that you've been in for an awfully long time just continues to march higher. It has had its fits and starts at times. but here we are, $4.5 trillion, slightly above it as we speak. Oh, sorry. Yeah, I was pointing, saying I can't hear him. So we'll keep it on the desk because everybody does own NVIDIA. Joe, you wanna take this one while we work on Josh's audio?
All you need to do is just look at the growth of revenue. It's absolutely staggering. 26 billion in 2023, 60 billion in 2024, 130 billion in 2025. Estimate for 26, 206, 276 in 27, 321 in 28. I mean, that's just historic. It's unprecedented, something we have never seen in the capital markets, and it's the reason behind the astronomical performance that this company is exhibiting.
So the target goes to 210 today from 200 at Citi on higher AI infrastructure. The target at KeyBank is now 250. We'll go back to Josh Brown as we've fixed his audio. So I don't need to look to the side and do like, what's up with that? I can't hear anything because I'm told now I can.
My bad.
All right. There we go.
Look,
here we go.
I think the big takeaway for investors from this whole era is that sometimes the most obvious way to play a theme is the most obvious way to play a theme. You have to remember, 25 years ago, I was a retail stockbroker, and we were trading the original dot-com boom. And every time a stock would make a huge move, like a Dell computer or a Cisco or a JDS Uniphase or a Lucent Technology, my clients would be like, okay, but what's the next, right? What's the next Lucent? What's the next Cisco? And we would end up in stocks that would obviously blow up, like Ciena, and we would end up in things like Juniper Networks and Sycamore. The old timers watching the show will be chuckling along with me. NVIDIA is still the most obvious way to play the AI build-out theme. Just look at the CoreWeave deal today. It's a $14.2 billion agreement with Meta. It's great for CoreWeave because it diversifies them a little bit away from Microsoft and adds another monster company to their roster of clients in a very big way. But what does Meta get out of this? They're getting access to NVIDIA's Grace Blackwell 300 systems because CoreWeave already has that infrastructure in place and ready to go. All of this benefit accrues to NVIDIA in the end. So it may not go up the most from here relative to other AI plays, but it is the foolproof name for people that want to gain sector exposure or want to gain thematic exposure. And I don't really see that changing. They've got this unbelievable competitive position. We've been talking about it on the show forever because it's true. And everyone's always like, well, what's the next? What's the new NVIDIA? There are other ways to play AI. We've seen other chip companies work out. I've talked about Lam Research on the show. We've had Broadcom, we've had AMD. But in the end, I still think people would be better off looking for the obvious answers and defaulting to them. And if you've done that with NVIDIA, congratulations. We're now breaking into a new range, and who knows how high this one can go.
Well, the question is what to do with it from here. The stock's up 18% in the third quarter. I know you're not. I do find it interesting, Amy, that you're trimming NVIDIA here. Why now?
Well, we've trimmed it. We've owned it since 2014, so we've trimmed it along the way up. Every sale has been a bad sale so far. Obviously, it's making an new all-time high.
So why is this time going to be different?
I'm not sure it will be different. I just think I agree with everything Josh said. This is the most obvious play. We're not selling out of it. But I do think it's prudent as the position keeps getting larger to just keep it in line. I do think at 4.5 trillion, you're kind of asking yourself, okay, what's the upside?
I mean, you know what?
Right.
If Brad Gerstner was here right now, you know what he would tell you the upside is? Because he said it this past weekend with Jensen Huang in his podcast with Bill Gurley. The upside's $10 trillion. Market cap.
Market cap.
That's
okay.
not 10 more trillion from here. But you're talking about a $10 trillion market cap.
A double from here. I think that's a while away. And I think, and with NVIDIA, you do get opportunities to sort of go back in. It hasn't been a straight line up. And I do think you're seeing more articles about what the return on this AI as Joe said, the trillions of dollars that are going into AI CapEx right now, what's the return on that? When are we going to start to see that? I think you will get people questioning that again on the way up if it eventually gets to 10 trillion, which again, we'll see.
I mean, this remains a key question as Wolf, Jim, talks about AI spending expectations and how it's the biggest driver of market performance. Mm-hmm. So the hyperscalers are tripping over one another to continue to spend tens of billions of dollars towards their AI, their build-outs. And for now, it's great. And that's why Citi has raised its forecast for the hyperscalers to continue to spend the way they are. The moment, and who knows when it's going to be, could be next year, could be 10 years from now, who knows? The moment that there's a comment about spending less in CapEx, is that the moment that everybody says, oh no?
Yes, it is, Scott. But I think to the setup of your question, that we're probably a long way away from that. And it's not just because those hyperscalers have made such bold announcements, really quite frequently and quite recently, but it's also there's other aspects to this that I don't think we give enough attention to, like the international exposure for AI buildouts. Let's not forget, just a few months ago, the President Trump visit to Saudi Arabia, the data center buildouts that are going on in the Middle East. Europe doesn't want to left behind. Asia doesn't want to get left behind. So I really don't think that, when you consider international, I don't think that moment of truth, if we'll call it that, is anytime soon.
Let's look at NVIDIA again, guys. Put it back up for me, please, and take it out at least a year, just to show you it's not immune to sell downs. Yeah. We've seen it happen. And give me a year now, if you could, because it didn't happen that long ago.
It did.
If you look at the 1 year, it was in the spring that the stock had that reset. It got into the 90s.
It did along with...
And here we are with a reboot, a double since then.
It did along with the market, and it really was a source of liquidity, an ATM, if you would, at that point. I think if you're owning NVIDIA, you're asking yourself the question. Jim nails it. I mean, and you brought it up to Jim, Scott. It is all the risk surrounds the spending slows. Okay, how are we funding the spending right now? If you take the Mag 7, obviously NVIDIA is not going to be part of this, and you also put Tesla to the sidelines, you're left with 5 companies who have $480 billion in free cash flow from operations this year to spend on the build-out.
Citi says CapEx across the hyperscalers is going to increase in 26 from 420 to 490 billion, right? So you're approaching $500 billion in spend. And through 2029, from 2.3 trillion to near 3 to 2.8. So you're already looking out to 29. I mean, are we buying these stocks today trying to guess what 2029 is going to look like? If we're suggesting that a lot of the market performance is in fact being driven by the spend, as Wolf suggests.
I would be remarkably surprised if along the journey to 2029, there is not some form of a stumble, whether it's in the economy, that allows that free cash flow grow, not to continue at the pace that we've seen it over the last several years. So I think you have to be prepared for that. It doesn't mean I want to sell NVIDIA. It doesn't mean at the end of that journey in 2029 and 2030, NVIDIA is still not the winner, but you just have to set the expectation. This is all about the ability to generate free cash flow. And there could be some form of a stumble where these 5 companies don't gather the free cash flow at the rate they're currently.
And remember, AI revenue this year is projected to be about $20 billion. So you're talking about numbers getting to trillions of dollars to spend. Yes, of course, I think the revenue will ramp, but that revenue has to ramp pretty damn fast at some point to justify these CapEx levels.
Scott, let me make the pedestrian comment here that we're about to turn into the fourth quarter. And this is a year in which, I don't know what the exact number is, but mid-20s as a percent of managers that are outperforming their benchmark, that becomes a problem for the other 75%-ish that get into the fourth quarter and say, oh my goodness, end of year is coming, I've got to throw money at the market, particularly if they raised cash during that time that we were talking about. Joe, you said it was a source of fund in April, when we had the post-Liberation Day meltdown. People are going to throw money at the markets. And where are they going to throw it? They're going to throw it at the obvious leaders and things that are probably the safest.
I just don't feel like that is a layup, to make it such a declarative statement that they're going to throw money at the market. What if they don't? because
Well,
they
if they
look at
don't,
the
that's-
valuations and think what a lot of other people do. Why would I deploy all this cash now when stocks are at record highs and when people say valuations are already stretched?
But-
Maybe because I think earnings are going to be really good and the Fed's cutting, so that supersedes any risk that I have on the other side about valuation and putting new money to work at these levels.
You're partially answering the question, but allow me to be a little bit trite here and just simply say that this is the setup that happens in this sort of year every year going into the fourth quarter. Despite what you just said, every year when you have this many managers underperforming, and in particular when you had a whoosh down in almost a bear market in April, that had a lot of people move to the sidelines. They've got to catch up. And I hear you.
But it's trickier when you have such a select group of names
It's been
that
the
have
last 3
carried the
years.
load
It's been
for
the
the
last 3
market.
years.
Sure, but I don't know.
So thanks for having me, Charles. I think we're on a new wave ahead of a new wave of investment in AI driven by the agentic revolution, right? So what we've seen so far in the first wave was mostly targeting chat and search related use cases. Now we are ahead of this new wave, and this is why you're seeing the investments going from a few $100 million to billions of dollars.
Right. So here, last week, David Einhorn said, okay, using a Gartner hype cycle, this is where we are. See that peak of inflated expectations? That's where we are, and we're going to plunge through a trough of disillusionment. And if that's the case, the stocks that are all involved in this may make the same move. Are you worried about this?
So first, Charles, we disagree that we are at the peak of inflated expectations. If you look at expectations, for example, for NVIDIA, it's barely for 8-10% growth for the next 5 years, right? And we can see what the orders are for the next 5 years. So we have pretty good visibility for the next 3 to 5 years in terms of what projects are coming online, what are the use cases, and so on. But where the uncertainty is, what happens after the 5 years, right? Do you actually have these AI agents be useful? And this is where I think picking the right companies is going to be key.
All right, because again, 2 weeks ago, MIT said so far only 5% of companies said they're getting any kind of economic benefit. You brought up NVIDIA. People are saying, okay, they're doing some kind of shell game here. NVIDIA pledges $100 billion to OpenAI. OpenAI signs a $300 billion deal with Oracle. Oracle commits $440 billion to buy NVIDIA chips. They're just saying it's one of the old school, like if you go in the corner of Times Square, one of the shell games. Is it?
Well, it definitely sounds like it. However, I would say that NVIDIA has been doing this, supporting the ecosystem for the past 15 years. So they basically invented AI, and they've been trying to develop use cases and support companies to be able to come up with new products. So while I don't think it's necessarily a positive, I think the stock was up on the OpenAI announcement, it's not necessarily a negative because you are going to need to invest trillions of dollars.
So in a way, it might be a smart business decision.
That's right. So it's basically a good business decision for them because they're diversifying slightly further down the road while we like their current business.
Everyone's got to go to your site, spear-invest.com, because you make these amazing flow charts. I love them.
When people talk about a bubble in this area, you pay any attention to that?
Well, naturally, what was going on with NVIDIA and the circular nature of the Oracle AI deal at first glance could look like the start of a bubble. But if you're running NVIDIA and you got $400 billion of operating cash flow in the next 4 years, and you're going to reinvest in the sector you know best, which is feed your little seedlings around the country and further your business.
All right, I hope you're all doing great today. NVIDIA reached a new all-time high during today's trading session and also received multiple analyst price target upgrades. Citi went from $200 to $210 with a strong buy rating, and KeyBank went from $230 to $250 with a buy rating. I don't put a lot of weight behind analyst price targets, but I'm sharing this with you so that you're aware of what's happening. We also got multiple pieces of positive news that are related to NVIDIA. CoreWeave announced a $14.2 billion deal with Meta signaling continued demand for NVIDIA systems, and OpenAI today announced Sora 2, their new AI video model. All of the clips clips you're seeing right now were generated by Sora 2. This will further increase the need for more compute from NVIDIA. I want to make one point about something that was mentioned in one of the clips you just watched. It was stated that AI revenue is currently around $20 billion. Last week on the BG Squared podcast, Jensen Huang had a very different view on that topic, saying that AI-driven revenues are already in the trillion-dollar range as we speak. He made the point that the hyperscale companies like Meta, Google, etc. have already shifted their platforms from CPUs to GPUs, and therefore AI is already representing the base of their revenues. As Jensen has said in the past, the ROI on NVIDIA systems is immediate because greater performance per watt leads to greater token generation, and greater token generation leads to greater AI revenues. In other words, many companies are already seeing a direct ROI on their AI investments. Meta is a great example of this based on their most recent earnings report. Also look at Microsoft and Amazon. They told us this past earnings season that they collectively have hundreds of billions of dollars worth of backlog that they have to deliver to their clients. In other words, they're already seeing a direct ROI on their AI investments, and they're investing heavily to try and meet extremely strong demand from their paying customers. There's been a lot of talk recently about an AI bubble in the financial press. As I've mentioned in previous videos, while there are some similarities between this AI revolution and what happened in the dot-com era, it's important to recognize that there are also fundamental differences between the two eras in multiple key areas. I'll very briefly mention a few of those differences. First, the largest spenders in this AI revolution are mature mega-cap companies that have the deepest corporate balance sheets on the planet. Second, the largest spenders are not aimlessly investing in AI infrastructure in the hopes of eventually finding a use for it. They already have multiple uses for it, and they're investing heavily in an attempt to meet very strong demand. Third, the largest spenders are primarily funding their AI investments by means of their own cash flows. That was not the case during the dot-com bubble. Fourth, new use case development and mass public adoption of the technology is going to happen much faster than it did during the early days of the internet, because the internet is already here, making new use case development and mass public adoption immediately possible. We don't have to wait 10 or 20 years for it to happen. It's already happening at this very moment. This drastically reduces the risk of long digestion periods and overbuilding of capacity like what we saw in the early days of the internet. And so I don't think it's reasonable to view the AI revolution and the dot-com era as direct comparisons of one another. Now, will there eventually be an overbuild of capacity? Possibly at some point, but I genuinely think we are at least 3 to 5 years away from something like that happening, if it happens at all. At the same time, will there be certain parts of this AI revolution that eventually enter into bubble territory? Sure. Some parts likely will, but that does not mean that NVIDIA is a bubble, nor does it mean that AI as a whole is a bubble. On the topic of an AI bubble, there's been a lot of finger pointing at NVIDIA's recently announced $100 billion investment in OpenAI, with many hearkening back to the vendor financing of the dot-com era. While I can understand the concern that some people have given what happened back then, I don't see any red flags in this particular investment. OpenAI is not required to purchase NVIDIA hardware, and NVIDIA is viewing this as a straightforward opportunity to generate a greater return for shareholders. As I explained in previous videos, you have to consider this investment from NVIDIA's perspective. I want you to think about this for a second. Imagine you are in NVIDIA's position. You have more profit than you know what to do with. You just approved a $60 billion share buyback that's in addition to the $14.7 billion buyback that already existed. And now if you're NVIDIA, what do you do with all of this extra money that's at your disposal? Ideally, you would look for very high probability, strategic opportunities to deploy that capital and gain a return on that capital for your shareholders. Now consider OpenAI. ChatGPT has 800 million weekly active users. It is the fastest growing software product in history, and demand for that product is showing no signs of slowing down. And so if you're NVIDIA, why would you not deploy some of your capital, invest in OpenAI, and presumably get a nice return on that investment? It seems fairly straightforward from NVIDIA's perspective. And an added benefit for NVIDIA is that some of the capital they invest in OpenAI will be used by OpenAI to purchase more hardware from NVIDIA as OpenAI scales to try and meet extremely strong demand from their users. Listen, I understand the concerns whenever we hear about vendor financing, but I do not think this investment in OpenAI is a red flag. When I consider the investment from NVIDIA's perspective, it's very straightforward and it makes a lot of sense. Could this situation eventually devolve into something troublesome? Sure, that's possible, but I think that at the current moment, it's a virtuous cycle. I don't see any red flags of fraudulence or bubble-like activity. I see a clear, pragmatic business decision by the largest company in the world to put some of their profits to work in order to generate a greater return from that capital for their shareholders. Looking ahead, we have NVIDIA GTC in Washington, D.C. this October, with a keynote from Jensen Huang scheduled for October 28th. Whenever Jensen gives a GTC keynote, he usually announces large-scale projects that are unique to the region where the GTC event is being held. Since this GTC event is being held in D.C., I wonder if we will get any announcements of sovereign AI deals with the U.S. government government or large-scale projects with U.S. companies. I also hope we'll get an update on NVIDIA's progress in quantum computing at this event. And Jensen said on last month's earnings call that he is anxious to share more details about Rubin with us at GTC. As a reminder, Rubin is on track to launch in 2026, and it is the first NVIDIA architecture wherein every single chip is new and revolutionary, co-designed to deliver a massive increase in performance. I think most analysts are not only underestimating the growth of NVIDIA's data center business, but I think they're also massively underestimating the long-term growth of NVIDIA's physical AI business. With physical AI, we're no longer talking about AI agents that complete digital tasks on your behalf. We're now talking about physical AI agents that will complete physical tasks in the real world. Physical AI is likely to be the biggest wave of AI yet, and NVIDIA is actively establishing themselves as the underlying foundation supporting all of it. NVIDIA sells the systems where the AI models are trained. They provide NVIDIA Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device, real-time inference through NVIDIA AGX. From the hardware in the data centers to digital twins in Omniverse to the hardware on the robots. NVIDIA provides it all, and they're establishing themselves as an indispensable foundation to physical AI. Over 2 million developers are already building on the NVIDIA robotics stack. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business. This is a massive growth opportunity for NVIDIA that does not get enough attention. In addition to physical AI, we also have many other large growth opportunities that NVIDIA is really just starting to capitalize on, including sovereign AI, enterprise AI, which Jensen believes is an opportunity worth hundreds of billions of dollars, many AI native startups, and quantum computing. Jensen told us earlier this year that NVIDIA is already working with just about everyone in the quantum industry on NVIDIA's CUDA-Q platform. Jensen also told us that the next generation supercomputers will have a QPU assigned with QPUs connected to GPUs. Just as NVIDIA used their GPUs to speed up CPUs, they're now going to do the same thing with QPUs. Again, this is another large growth opportunity that doesn't get enough attention. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory build-out between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble-bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.